All right, there we go. London Open session on Monday. Monday NFP week, first week of the month. There we go. Interesting. We have 10 a.m. high impact news for USD, which sets up the stage for the 10 a.m. New York AM session. Silver Bullet to be probably the best one for this week. For this week event, because NFP protocol best trading up until the Wednesday New York pre-market usually. Yep, that's what it is for this particular week. Next week CPI. All right. Good morning, Mr. Money Glitch. Long time no see. How are you? I hope you are doing great. Nonetheless, let's go to the analysis here. Analysis paralysis. We did trade lower last week. Took some sell-side liquidity. This is ES market first, by the way. And we left some clean relative equal highs up here. Drifted lower, but ES was having rather hard time trading lower. It did made a little bit of a follow through, but it was rather shallow. And with rather small protraction. But that's fine. We definitely opened with quite large of an opening, new week opening up. And I definitely want to have that noted. So we closed here. I feel like this will be a main PD array for this week to navigate with. All right. Let's do the gradients. So far price traded only to the upper octane of this. All right. Then price traded higher slightly, but it was rather a sloppy run, I would say. Sloppy run. My idea generally is I don't expect this to completely overlap this new week opening up. I would initially suspect to see if it offers like an actual discount sensitivity and sends price towards those equal highs up here, potentially. I'm not saying that this will be the case, but that's like a line in the sand. If we overlap this new week opening up completely and go below it, then I will change my slightly bullish stance on it for the first portion of the week. But at the same time, I'm looking for the new week opening up to be retraded back into. Well, I cannot really help with that, Mr. Money Glitch. It's not my trade. I have no idea what and how did you get into it. So it's better to leave you on your own, I guess, than give you advice that may not suit. But yep. Let's see. MNQ. Let's see this one. What do we have here? All right, so we traded back into this suspension block in here on Nasdaq. Very slightly, but we did on a daily chart, so I will annotate that. Suspension block. Here. And as yes. And Nasdaq also had a pretty large new week opening up, which, I mean, definitely it caught the attention for, as long as we are in somewhat of a close proximity to this, then I feel like it will be impactful. As either a draw or a catalyst to send price one way or another. Yeah, so far price was just meandering around, not doing too much. We are very close to tapping into that new week opening up high on NQ right here. But yeah, we'll see, I guess. We didn't quite reach actually up into this suspension block here. We went close, but we didn't quite, and we left some relatively highs. So I way more prefer the buy side liquidity here to be engaged at some point. But let's see. I don't have a very obvious idea at the moment. So I will taper it. I will taper it what it does and what it might want to do. And I will try to arrive at some clues. Because again, due to the economic calendar, the 10 a.m. to 11 a.m. silver bullet seems to be potentially the best for today. I mean, that's where the movement should be, though. Nonetheless, this long open session here, we might gyrate a little bit, but I'm not expecting too much of movement either way. So let's see what we'll get. But yeah, those equal highs and the suspension block on the daily chart seems like quite a nice draw on liquidity for the price to potentially reach up into. For Nasdaq at some point. Doesn't need to be right now. And ES technically left also those pretty clean equal highs too. And it also has very clean buy setup there. Suspension block already overcome that. Nothing really else that I like to annotate inside of this price action. Yep. Yeah, but no less. I do favor slightly more bullish side in the beginning. I have cleaner target for today, I believe, on NQ, but ES should also um, follow up with similar price run. Okay, so I guess I'll be watching tape reading Nasdaq this morning for two main reasons. It looks more liquid, and it's way closer to the NWOC, which I want to watch and study how we will trade around that particular PD array. So let's maximize the chart and let's start the session. All right, so we got the touch into this. We got the touch into the NWOC high on NQ. Yes, it's quite higher, so it's not even approaching that yet. And let's see. We'll see how it will react off of that. And around that level, basically. Yeah, it's quite a large new week opening up, and it's mostly untraded, mostly inefficient. So definitely price will want to have a lot of interest to reprice back into it. It left some sell side liquidity here from or since Asia, and that's, I guess, it's a low hanging fruit type of objective that I would want to watch and expect to be traded to with the current market structure. Obviously, we'll see how it will go, but that's what I'll be watching for or looking for. We did formed a small little bearish fair value gap here, so let's watch that. All right, interesting enough how it's offering a measure of displacement in here off of the, I mean, after touching the new week opening up high. That's quite interesting. Well, that's quite a nice little BC being potentially formed in here. Also taking short-term high and all of that off of this new week opening up high key level. All right, so I will annotate that BC in here. And what's the thing with it? So wouldn't I be comfortable buying in here if I'm possibly slightly more bullish and expecting these highs to be potentially reached? Well, theoretically yes, but at the same time I kind of know that ES is not even close to the NWOC yet, so ES can be drawing still lower, which makes this Nasdaq in here potential long in my mind a little bit less optimal, because if ES will draw lower, then Nasdaq will probably follow that also. And if that's the case, then it will likely go through this and not offer a significant run. But yeah, I mean, because it's a little bit iffy, because it's not that obvious for me personally here right now, I'm not in a rush. I don't want to chase price. I would love to see, to wait and see how it does and what it does, and I'm okay with that. This is the first session of the week. It's a London Open session after the huge new week opening up this week, so there is really no reason to rush and try to do too much, I guess. So let's see. But yeah, not gonna lie, I would be slightly more interested in this particular BC becoming a potential inversion for YGAP at this moment versus buying it up and hoping for higher, even though it might deliver. So let's see, or we'll see. Some key PD arrays on the upside. We definitely have this inversion for YGAP here. So let's annotate that, and we have a CB here, which is also important. And what it is so far in here in my mind is that this high is the highest high. Everything to the left was the buy side of the curve. Everything to the right is the sell side of the curve. And we can see that we are selling off nicely. So low risk sell, some distribution, redistribution, and we are in a potential area for another redistribution lower, and potentially seek this low out to clear the sell side liquidity. That's what I anticipate right now. That's why I don't necessarily want to be buying this one here, and I would more so like this to become a potential bearish inversion for value gap that could send us towards this low, rather than a bullish fair gap that sends it higher. Even though it can, I'm not saying it can't, but that's what I have in mind, and that's the tape reading exercise that I be doing here. All right, so the first key important point of reference that I'm watching is this inversion value gap here, and I want to measure the willingness of price to trade into it and how it does with that. So far, this 304 value gap was left untouched, and only a small institutional order from entry was offered here. Right, long wick, premium wick, consecutive encroachment, price traded up into it and closed way lower. So this already, to me, is potentially bearish and potentially sets up the stage for running down into this inefficiency, and we'll see if we can get through that later on. All right, so ever since we got this little touch in here, the consecutive encroachment, price is trading slightly weaker, slightly lower. Let's see if it's continuously being bullish in here, it needs to close above the consecutive encroachment of this premium week, and only that would resume a potential upside in my mind. Otherwise, this looks a little bit suspect, meaning we could trade down into this Bessie. All right. It closed exactly at consecutive encroachment. So let's see, let's watch if it can bulk up any strength, take out this short-term high. Yeah, it can't really sustain any price above this weak consecutive encroachment, and it sold off here. That also isn't the most bullish sign, and it favors the run into this 304 Bessie, and we gotta watch and see what it will do. I suspect that it will give way. I suspect that it might act as inversion for value gap, and it already offers these type of signatures. So let's see. But anyway, we would need to close below the low of the Bessie, and that would be indicative of likely continuation towards the sell side liquidity here, and potentially below 28,500 even is like a good number. So let's see. So right now we close below it. This should act as inversion for fair value gap, and that's actually a potential setup that I would like to engage with, aiming for that sell side here. Yeah, that maybe even is. Let's see. That would be like a 1 to 2. All right, so let's see. Yeah, currently my max risk is 125. Until I recoup the drawdown, then I can go back to 250 max risk. All right, so my expectation is to use this as inversion for value gap to allow myself a potential deeper dive into the new week opening up and the sell liquidity from the Asian session here. That's my draw, that's my logic. And assuming that this was just a fake run up to offer a measure of distribution into that. But yeah, if that's the case, I really want to see price respect the inversion fair value gap and start moving lower, attacking this low here aggressively. Gaining momentum into this inversion fair value gap, I don't like that. I don't like to see that generally. And closing above it might be even a reason or catalyst to just close the trade early and don't risk a full stop. So it closed above it. Yeah, that would be a candidate for immediate close. I feel like there is a small little fair value gap here that can act as inversion too. So that's like the last line of defense that it's probing. But yeah, unless it rejects it quickly, then that's somewhat of an issue here. Yeah, that doesn't look very good at this moment. Let's save the stop though. Well, so that was a losing transaction here to begin the week with. It wasn't over leverage or anything like that, so it is what it is, right? The idea, let's see still how it develops, but I was generally confident with the idea, or like I like the idea. So yeah, I'm not gonna argue that this was an unnecessary trade. The idea that it had behind it, in my mind, made sense to expect this level here to be traded. Maybe the timing wasn't the best, apparently, but yeah, we'll see. We'll watch and see if we can still gravitate there or not. Yeah, definitely. I wasn't necessarily willing to see or expecting that deep of a retracement here. I was rather expecting that this inversion should offer strict resistance and then quick run lower. But apparently there was some some deeper retracement. All right, it's turning around here a little bit. It should just lose the ground in here completely. It should not offer any support in here. It should not be seen. And if it can leave this range to the downside, then this should act as a balanced price range then, and offer very strict resistance though. So yeah, generally I feel like because we didn't close below this weak consecutive encroachment right away with this drop, and we failed to close below it 3 times, I mean here, here, and here, that kinda set up the stage for a potential deeper retracement, I feel like. I think if we did close below it right away, then it wouldn't do all of this in here, which yeah, obviously is a little bit different type of delivery, right? It's more consolidated, spending time in here. It's less optimal. I don't necessarily think that this is outright reversal here to go completely higher. I still think this is more of a point where price is likely to go, but we'll see, right? We'll see. So let's see, it's trying to trade outside of this range in here, but it fails with a close. So this to me still looks like it could roll over. It took short-term little buys at here, I feel like. No, it actually left relative equal highs. So now poking above those equal highs, if we could reject, then this should start the move lower. That's what I'm anticipating right now. Yes, I mean, in proper context, SMT is important, sure. But it's kind of like the last, I mean, in my experience or in my utilization, it's like a last piece of information. Meaning that if you have everything in your line, everything what you would expect to be there is already there, and you know where do you want to aim for, where is the discount to enter or premium to enter. If you have all of that, and on top of that you get an SMT, then that's like a loaded deal confirmation. But yeah, looking for SMT just for the sake of SMT is not that useful, I would say. Well, so generally how I see this right now, we are banging around inside this range, and the line in the sand is this consecutive encroachment and this consecutive encroachment. If we go above this one here, then I might be short term, then I might be wrong about the idea that I'm trying to outline right now. But what I assume is that we won't go there currently, that we might consolidate inside of this area in here for a little while, eventually have clean buy side like this and run that buy side out first, and then turn around, and very important, the moment it will close below the 302 candle, I would suspect the price to really like speed up and aggressively reach towards the sell side and potentially some lower. That's kind of what I would anticipate at this moment. And let's see if that will be holding any validity to itself. So yeah, this is generally an interesting little situation in here, because I feel like I don't think what we did in here so far reverses the whole idea and the potential idea that the price is drawing lower. It might be drawing lower still, but at the same time it became sloppy enough to be tricky and difficult to engage with. So we kind of really need to shake off this high resistance type of delivery here, this time distortion type of delivery. So let's see, we definitely formed 1, 2, 3, 4 equal highs that are being taken out right now with this candle here. So let's see if we can get any rejections. because if it's really bearish here, if it's really heavy, it would need to reject those equal highs and quickly start moving lower. If it will start getting momentum on the upside, then I suppose it's a nothing burger here. But yeah, generally leaving those relatively lows like this, I feel like this is like an unfinished business nonetheless, and it's not going to last, or not, it's not going to be left like this, I feel like. So I like the rejection here initially. That's oh, okay, that's very good. That's very good. That's exactly what I was looking for. Nonetheless, I would have been stopped out on the high here probably. But yeah, this rejection is exactly what I was looking for. And now I want to see a close below this inversion for value gap here, preferably. It might want to retrade into it slightly, but then I would expect a quick attempt to run those equal lows here. So let's see, we didn't quite close below it yet, but we did close below the consecutive encroachment, I believe. Yes, we did. I can now remove this one, and let's see that this one has my main focus. So far, everything is in line to send it lower towards the sell side here, I feel like. Okay, we got a close at the low. I would like slightly more to close slightly below it, but that's fair enough. This still should act as inversion for value gap, nonetheless. And it did form a SIB here. So it could trade into it as institutional or financial real, I believe. It should not close this one, though. It should not. It should leave it partially open. So if this is being closed, then it's not ideal. Let's see. But trading slightly up into it, completely permissible, I would say. Let's see. I lost 93 on that trade. 93. 28. Yes, so for a drawdown mitigation, I still have a little bit of room for my max risk. I would assume that something like this, if I could get it, that would be like an idea to mitigate the drawdown within the context of running towards the sell side liquidity here. All right, looks like it's running already. That's fine. If I don't get it here, that's completely fine. So now, as we are approaching this consecutive encroachment of this week, we should really close below it next. That's what I'm anticipating. If we do close below it, then it should really speed up and quickly be running towards the sell-side liquidity. And that's what I would expect. Anything else, if we fail, for example, to close, then it's more likely that we will go back inside of this range. All right, so we did touch the consecutive encroachment, but not close below it. So that makes the probabilities slightly greater to see a potential return back into the CB. I feel like with that, the CB is maybe still in play. All right, not anymore really. It looks like we are stretching below the consecutive encroachment, so now I want to see a close below it, and if that's the case, it should quickly run towards the sell side. That's the case, we close below it, so it really should not be having deep retracements at this moment. I feel like it's kind of time to go. So this week, it's a discount week, but we went below it also. It should also act as a premium type of array, so we could touch into that, and then I would expect this to sell off and attack the sell-side liquidity here, and deeper run into the new week opening up. Again, 28,500 even. That's kind of like a little sweet spot where I would say it's reasonable to go down there, but we'll see. Obviously, we'll see. Small little dodgy candle like this, I like that. It should be rolling over and quickly, aggressively running for the sell side. And it should be not leaving much room to anyone who was long to escape that. So let's see. At this point, I don't think there is any reason or need to retrace back up into this CB and or inversion. But I guess the line in the sand would be the consecutive encroachment of this CB, and slightly above that, it should not go above the consecutive encroachment of this one. If it does, then it's probably not good for this particular idea. But yep. But let's see. We did approach this low, so it should, in my mind, it should really just do kind of like a waterfall and just, you know, completely smash this to the downside. It did open up in here, touch the new week opening up high. That could be enough to send it lower on the next candle. So let's see. Again, the idea that I'm having right now is that it should be heavy here. It should be heavy. It really should not have some some displacements higher here. That's completely not what I want to see. It should be just heavy rolling over towards the sell side. Otherwise, I just don't like the structure then. So I guess the line in the sand would be, yeah, the consecutive encroachment of the CB. I wouldn't even like to see it approach the consecutive encroachment of this inversion fair value gap. But let's say the volatility is large and the markets are a little bit unruly. If it does touch this, all right, it should not close above it. So it's like it might weak up into the consecutive encroachment of this, but it should not close above this inversion fair value gap consecutive encroachment. That's kind of like the line in the sand. If it will close above it, then yeah, it's not something I would like to see, definitely. So, well, I mean, already we do offer a little bit of trade back into the range after we took the sell side liquidity rather politely, rather shallowly. I still think that this should sell off. The point is now to frame how far or how deep could it reasonably trade back inside the range. And again, up into this inversion fair value gap, consecutive encroachment, and not close above it. That's kind of like the line in sand. But it could weak up into this consecutive encroachment here. That's kind of like the extreme. What I would say is permissible. Anything else, like rolling over off of this consecutive encroachment of the week, or this one, would be preferred, probably, or ideal. Okay, looks like it wants the inversion fair value gap again. And as far as this CB consecutive encroachment, let's see. Let's watch. That's kind of like the make or break type of point for this idea to reach down into the sell side. But I guess if it's still good, which theoretically there are no indications that it's not at this moment, it should roll over off of this area in here and attack the sell side. If it does go above it, then yeah, I'm probably wrong. And it is what it is. I like the reaction so far. It traded into this inversion with a weak. It failed to touch the CB and the body closed way lower. So that's positive signature so far. All right, that looks well. That looks nice. Let's see if we can get any displacement below this low in here. That would be ideal. All right. Came back with a weak discount week. So this consecutive encroachment here needs to be breached on the next candle or the next one after this. Otherwise, this will just become some consolidated type of sloppy price action. Right, it failed on this one, so this one is the candle that needs to close below it if it's really going for the sell side now. Imo, I think it did enough work here already with this week. Doesn't really need to go back into this inversion free gap by any means at this moment. It could or should just roll over and attack the sell side. Yes, and this is also the macro, so it should have no issues of running the sell side liquidity there. Still not close below consecutive encroachment, so yeah, we are running out of time. Any rally in here is just not welcome. Yes, I mean, it 3 candles and it couldn't close below the consecutive encroachment here. Suggests that it's not necessarily in a rush. That means that we could see another trade back into this inversion slash CB, I feel like, and or at least stay inside of this consolidation for a while until we close below this consecutive encroachment. Any continuation is slightly on hold, I would say. Let's see the ES and what it did. And ES did big nothing. I suppose it didn't really deliver anything besides a little bit of consolidation. Left relatively close ahead of this new week opening up. Well, that's a nice little pool of liquidity that will or might be attacked at some point, but it's very hard to make a point, make a decision when and how at this moment should it deliver. So I guess it's becoming less probable, especially, I mean, Nasdaq is also not following through with anything. ES is completely not showing anything either. I mean, I guess I would stick with the idea until proven otherwise and use this inversion and this CB as the line in the sand. But I wouldn't be very comfortable if I was holding a short at this moment. I wouldn't be very confident that it will deliver without any adversities, I suppose. So we are trading back into this inversion for value gap. And this is again kind of like a make or break type of point. It should reject that aggressively and be selling off if it's good, right? If it's not, it will spend a lot time in here and just, you know, don't reject that. Which again brings us to a point where the probabilities are more of a 50-50 than a very strong one-sided price run that I was personally anticipating. I was anticipating a strong one-sided price run on the downside, attacking the sell-side liquidity from the Asian session low and digging deeper into the new week opening up. But it's not allowing for that at this moment. It doesn't mean that that this inversion will not. I'm still watching that and I'm still looking for a reaction off of that here. And if it's there, that's great. Then it may want to seek that even after a little period of consolidation, but this really would need to reject the price. And it would need to be strong and stuff like that. And it's hard to expect that with this type of price action already and with what ES is doing currently too. So nonetheless, I guess that's it for today. I already traded, having high hopes, but yeah, the reality of the session got me here, and I got stopped out for a loss of $93, which is good. At least it's not a full loss, full stop out. There we go. We got the touch to the consecutive encroachment. I love the rejection initially. I think that's exactly what I would like to see. But also it should continue on this candle. So this candle's high. In my mind, if we can close near the low, it should not be breached before the sell-side liquidity would be attacked. So I guess that's the last thing to watch and observe for this session. I was waiting how this one will close. I don't like how it closed with this large for weak on the downside. So that's kind of like a I mean, the thing is, if we can overlap this week right away, like we do right now, that's good, and I have no issues with that. But it has to happen on this candle here, and there is no way around it. It needs to go at this moment. It did. I mean, it met every criteria on the upside that I would expect. It respected those also, which is important. And really, now there is no reason for this to trade any higher. It even took partial liquidity here, so it should be unlocked to deliver. This consecutive encroachment should be completely destroyed. Next. So let's watch, because it should pick up some speed here. So let's see if I can get that sell side documented. I like the close here. That's a very nice close. And it's stretching towards the sell side aggressively. I also like that. So we should in no time be breaching the sell side liquidity. And that would have been my target, though. If I wouldn't get stopped out, I mean, I closed it by hand here, but my stop loss was right above those here. So I would have been stopped out for sure with this peak, probably on the high. And then it would deliver likely to the target. So nonetheless, the idea wasn't bad necessarily. The idea about the draw, it was correct. The mistake was the engagement here. And yeah, that's what I think was the problem here. How I entered and how I executed on the idea rather than the idea itself. And there you go. We got the salsa liquidity here. So can I get, there we go, appears below it. Beautiful. So in the end, it delivered nicely, but without me. So it is what it is, I guess. It is what it is. Nonetheless, thanks for watching, though. It was a pleasure. I hope I was able to make this session a little bit brighter. And yeah, see you next time, probably tomorrow. So thanks for watching. Bye bye.